This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We have been watching and listening to the CEOs of 7 national banks testifying before the House Financial Services Committee on a wide range of topics, as is normal. Particularly, a lot of questions were asked about inflation, the ability of consumers and households to withstand the inflation, pay higher prices, and what roles banks might have in helping them do that. Also, the question of perhaps some further regulation, in particular, what reserve requirements might do in terms of lending practices. Also, we heard questions about hiring practices, promotion, as well as lending practices, and particularly what is being done to avoid discrimination in those areas. And finally, a fair amount about overdraft fees and whether we should be eliminating overdraft fees, some of whom those banks actually have already done that. We'll continue to follow those hearings as they develop. If there's any news, we'll be sure to bring it to you. But in the meantime, there's also big news brewing right now down in Washington as we all are getting ready for the Federal Open Market Committee to come out with their decision and then to hear from Chair Powell. We go now to Michael McKee, Bloomberg International Economics and Policy correspondent in Washington, covering the Fed decision out, about 2 hours right from right now. Mike, what are you expecting?
Well, we are expecting a 0.75 percentage point increase in the overnight bank lending rate, the Fed's benchmark rate for the economy. That's been priced into the markets and would not be a surprise. What everybody wants to know, though, is where do the dots end up on the dot plot? Does the Fed move its forecast for where they think the rate is going to be at the end of this year, at the end of 2023, and in 2024? Do they move it significantly higher? Do they think we need to get up into the 4.5%, 5% range in order to be able to bring down inflation? And then, when do they think they will be able to start lowering rates? We get our first look at the 2025 forecasts, and we'll see if they think by then we might see inflation on its way down to 2% and they might be able to cut back. We will see what they forecast for inflation in the Summary of Economic Projections. That's going to be another important document out today. Not just inflation, but what do they think the acceptable limit of unemployment is? How far do they think it will go up as they start to move interest rates higher and higher? And finally, David, they will be asked about, especially Jay Powell, will be asked about whether they're going to continue this 75 basis points kinds of move. Remember, the next meeting is November 2nd. It is 1 week before, 6 days before Election Day. Can you imagine the Fed might become a political issue on some candidates' campaign commercials?
Boy, that would be a surprise, wouldn't it, Michael McKee? Thank you so much for that reporting from Washington. Mike McKee's going to be covering this FOMC decision as it comes out right here on Bloomberg, because we'll be having a special to cover all of it. In the meantime, to get his appraisal of what we are likely to see and what it would mean, welcome Stephen Stanley. He's chief economist at Amherst Pierpont Securities. That is a Santander company. Stephen, we always love to have you here. Give us a sense of what you're expecting.
Yeah, I think, as Mike said, 75 for today. And I think, broadly speaking, Chairman Powell is going to want to try to get off of what I've called the hamster wheel of these 75 basis point moves. I think when they went to 75 basis points first in June, they were kind of forced into it by some bad CPI data. Same thing happened in July. It's happened again for September. And I think given that we're going to be looking at rates above 3%, they're not quite to where they're probably going to have to get to, but they're getting closer. And if they keep going in 75 basis point chunks, we're going to get to some awfully high rate levels soon.
But Stephen, and listen, hindsight's always 20/20, but did they put themselves on that hamster wheel a bit? Because they were a little bit behind, most people thought. Even if they made some hawkish noises, they didn't move very quickly. And now do they actually have to do something special to convince the markets? Because before, the markets just weren't listening.
Yeah, no, that's the problem. They certainly were late to the game here. They were too easy for too long. And when they finally got going, the markets have kind of pushed them to be more and more aggressive. I think it is important that they reestablish inflation fighting credibility. And you certainly heard what I would call a pretty strident tone from Chairman Powell at Jackson Hole on that regard. I think we'll probably hear that again today.
It's not just the markets, the financial markets not listening, but I'm not sure that the labor market's listening either, because it's still pretty robust. And do they have to weaken that some before they get to where they want to go on inflation?
Sure. I mean, the Fed's never going to come out and say, hey, we're rooting for a higher unemployment rate. But the economy is overheating. It's out of balance, as Chairman Powell and others at the Fed have said, and they need to bring it back into balance, which means cooling it off a little bit. And so they're working on that, but it takes time. There are lags with monetary policy, as we've heard for many decades. And also, I think the economy had a tremendous amount of momentum because there was just so much stimulus, both fiscal and monetary, pumped into the system during the pandemic. And it takes a while for that to work its way out.
And one of the things you have pointed out is how broad, in fact, it tends to be broadening, the inflation forces are now. It was fairly narrow at the beginning. That's part of what led to transitory, I think.
Yes,
not talking about
exactly.
that anymore, goodness knows.
Yeah, no. Since last fall, really, it's been the case that inflation has been broadening out. And I think that's a really troubling sign for the Fed. It means that inflation is, to some degree, taking root, and people are getting more accepting of it. And you're starting to see wage pressures make their way into the inflation numbers. And so I think the Fed's job is going to be difficult. I don't think that inflation is going to come down quite as quickly as what the Fed in June and what private forecasters are thinking.
There's a lot of talk about terminal rate, where we end up. And we're up, people talking 3.5, 4. You're above that.
Yeah, I'm a little above 4.5, which was a pretty lonely view for a long time. Now, all of a sudden, it seems like I'm starting to get a lot of company. I think that the Fed is going to have, like I said, is going to have to continue to move higher for a while. And I think we're going to get into an interesting point, probably early next year, when the Fed does think that they've done enough. They're going to, the inflation numbers are still going to be way too high. Unemployment is still going to be very low. And in effect, the Fed is going to have to say, hey, we think we've done enough. Trust me. And I'm just not so sure whether the markets and even the general public are going to be willing to go along with that.
Yeah, that sounds like a tough time, actually. When the inflation is not coming down yet, they don't want to go any farther. At the same time, what do we know about balance sheets, corporate balance sheets and household balance sheets? Because last time I checked, they had a fair amount of, kind of call it dry powder sitting around.
That's exactly right. And in particular on the consumer side, all the fiscal stimulus and the savings that were taking place during the pandemic, very little of that has been spent, even with what I would call pretty punishing inflation for the consumer. And so consumers are sitting on several $1 trillion in liquidity above and beyond what you would have expected them to have prior to the pandemic. That money, a lot of that money is going to have to be spent before you see loss of momentum on the consumer side. And again, I think that's a big part of the reason why the Fed's going to have to work pretty hard to cool the economy off.
What does this all say about growth? What are you expecting?
I think growth is going to hold up for a while. Of course, we had the 2 negative readings in the first half of the year, but I think there was a lot of quirkiness going on there. I think we're going to see decent growth in the second half of the year, slowing as we move through 2023. I do think if the Fed gets really tight, we're probably going to have a recession, but I think it just comes later than where I think a lot of folks have talked about. I think it's late 23, maybe even 2024 before we see that.
So, Stephen, as an economist, how do you model out, if you can do that, how long and deep a recession will be? A lot of people are saying probably a recession. There seems to be a difference of opinion about how long and how deep.
Yeah, I think usually a long, deep recession is one in which you have where the economy has some really big imbalances that it needs to address. For example, in the financial crisis, we had massive housing bust. We had a lot of over leverage in the financial sector, and you don't really see that in the current economy. As we were just discussing, consumer balance sheets are in very good shape. I think corporate balance sheets are in very good shape. The banking sector is strong, as of course the executives were discussing today. So I think this could be what I would call more of a garden variety recession. We haven't had one of those for a while. We've had some pretty severe ones of late between the financial crisis and the COVID recession. But if you go back, recessions don't necessarily have to be multi-year, problems that cause growth to be slow for a decade, the way that they did after the financial crisis. They can be relatively short. And I think if we do get one, it seems like it would be more of that type than the prolonged type.
So, Stephen, give us an insight into how you're going to look at the various factors coming out today at 2 o'clock Eastern time. You've got the rate itself. People seem to be pretty sure what that's going to be, the 75 basis points. You got the summary of economic projections. You've got the dot plot, and you've got the news conference from Chair Powell. If you were looking for a surprise in any of those, where do you think it might come?
So I think the dot plot is the first place people are going to look. The arithmetic is pretty easy now for the end of 2022 because we've only got 2 meetings after today. So we'll have a pretty good sense of what the near-term outlook that the Fed is thinking about today will look like. The 2023 dot will tell you basically where the Fed thinks the peak is going to be. And then 2024 and 2025 will tell you how quickly they think they might be able to get back to a lower rate regime. I think the other thing that will be important is the rhetoric that Chairman Powell gives us in his press conference around the next meeting. In in July, they stepped away from giving very precise guidance for the next meeting. He kind of hinted that it would probably be either 50 or 75. My guess is that they'll continue with that sort of attack, and that feels like the right answer again, that it's either going to be 50 or 75. And as I said, I think they'd like to get off the 75 basis points a meeting pattern if they can, but the data haven't allowed it yet.
Yeah, optionality, I guess, is what they're going to want for November. Thank you so much, Stephen. It's really always a treat to have you with us on Fed Day. That's Stephen Stanley of Amherst-Pierpont. Coming up, President Putin calls for a partial mobilization while the UN tries to contend with Russia's war in Ukraine. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. President Biden just concluded remarks before the United Nations General Assembly, and a lot of it was about Ukraine, as you might expect, and he made it clear in no uncertain terms that it is Russia's responsibility.
This world should see these outrageous acts for what they are. Putin claims he had to act because Russia was threatened. But no one threatened Russia, and no one other than Russia sought conflict.
We welcome someone now who is an authority on foreign affairs generally and Ukraine in particular, John Herbst. He's senior director at the Atlantic Council. Mr. Herbst earlier served as U.S. ambassador to Ukraine. So, Mr. Ambassador, thank you so much for being with us. Let's go back to President Biden really invoking the powers of the UN to do something about Ukraine. Are they going to do anything about it?
It's very hard for the UN to act because the way to have effective action is usually through the Security Council. And Russia has a veto over anything the Security Council must approve, as does China. So the UN helped a little bit on the grain embargo that Moscow imposed on the shipment of Ukrainian grain, but that was only because Russia eventually agreed to it. Decisive action has to come from the United States.
In the meantime, we heard from President Putin of Russia overnight, and he both had what he calls, I guess, a partial mobilization, is that right? As well as some pretty, I think, intended to be scary talk.
You're absolutely right. Putin has regularly invoked Russia's nuclear weapons in order to deter the United States and NATO and Ukraine from taking resolute steps to help defeat Putin's invasion of Ukraine. And this is more of the same. The partial mobilization enables Putin to pull in more troops without, in fact, conscripting people in Russia who don't want to fight. So it's only of limited political risk. The nuclear threat that Putin laid out, he laid out at the same time that he's endorsing sham referenda in parts of Ukraine that the Russians only partly control. So the idea is if these sham referenda include the result that a majority of people there want to join Russia, in theory, Russia may annex them. And Putin is intimating, but not stating explicitly, that his nuclear arsenal would be used to protect those lands. Again, the idea is to intimidate the United States and NATO out of sending to Ukraine the weapons they need to defeat the Russian aggressors in Ukraine.
So, Mr. Ambassador, how do we know when to take President Putin at his word and take him seriously? Because I drew the same conclusion you just said. You put together this sham election over in certain parts of eastern Ukraine to annex them into Russia with his statement that he would use, he didn't use the word nuclear, I don't think, but it was clear what he was talking about, for any invasion of Russian soil. Until now, we wouldn't be talking about that. But if they annex it, then he'll say, yeah, you're invading my soil if the Ukrainian forces try to retake those areas.
Look, we have to pay close attention to this because Russia is a peer nuclear power of the United States. But if you watch Putin's activities, he's always happy to threaten this because there's no risk in threatening. And in fact, he's gotten the United States to self-deter from sending weapon systems to Ukraine by this threat. Not in all cases, but in some. So there's no risk to Putin in threatening. There's enormous risk to him in actually doing. And we've seen him make the threat and then not carry through. For example, he said when Finland and Sweden expressed their interest in joining NATO months ago, he said, well, we could have a nuclear response. Well, NATO is now accepting Finland and Sweden, and you've had only a deputy minister of foreign affairs complaining about this. So that threat went out the window. Putin does not want to die in a nuclear holocaust. So the fact that he might threaten is one thing. The fact that he would actually do is another. We need to understand that.
What about the partial mobilization? How big a threat is that? I mean, it's something that I think President Putin didn't want to do because, in part, it conveyed even to his own people maybe things weren't going so well.
Well, keep in mind, he's had a dreadful 2 months. Remember, they promised to take all of Donbass in April and began an offensive to do that. And by the end of July, that offensive was stalled. Then the Ukrainians take back more territory in a counteroffensive than Russia has seized since last April. So those are 2 defeats in a row. Then Putin goes to Samarkand for the Shanghai Cooperation Organization summit. He winds up apologizing to Xi, the leader of China, publicly for his Ukraine policy, and he's chastised publicly by his pal Modi, the leader of India. So he's had a dreadful several weeks. Now with this partial mobilization, which again does not threaten him politically in Russia, he can say, I'm doing something. And then he's hoping that this nuclear threat will stay our hand. I don't think it will, but the Biden team has at times been too timid when Putin has made that type of nuclear threat.
So let me ask the unfair question, but I think is all of our minds. How does this end? Because President Putin's going to have to come away saying to his people he got something from it. Ukraine's not going to want to give him anything at all. How does this end?
I think it ends when Ukraine takes back almost all the territory, if not all the territory that Moscow currently controls. Putin fully controls the Russian media. He could claim victory even if this were to happen. But keep in mind, some people want Ukraine to compromise by giving territory to Russia. But Russia has been conducting a war of war crimes with genocidal elements. They've been torturing Ukrainian civilians, raping Ukrainian women, abducting Ukrainian children. So if Ukraine were to offer Russia territory, that means Ukraine is offering Russian millions of Ukrainians who can be tortured and worse. We cannot accept that. Ukrainians cannot accept it. And Ukrainian forces with American and NATO arms can win this war.
Mr. Ambassador, let me come back to where we started, which was President Biden in front of the United Nations General Assembly. At this point, will this go down as a failure of the United Nations? I mean, a lot of us who are not familiar with it the way you are thought that that's why the UN was there. And it's not clear that the UN is going to do anything about this.
The UN was created to help avoid circumstances like this. But as long as major powers have a veto in the UN National Security Council, major powers that conduct aggressive wars, the UN cannot serve that purpose. There are other things the UN can do which are helpful. So it has a role, but it's just not a role to be the arbiter of who is right, arbiter imposing a peace when a major power turns out to be an aggressor.
President Biden did call for what I took to be some reform in the United Nations, both saying we shouldn't use the veto so much. Now that I'm not sure how that enforceable it is, but also we should add to the permanent members of the Security Council. Is that a serious proposal for reform? Would that change things at all?
It is a serious proposal for reform, but still a very difficult one. Serious does not mean a successful one. The current permanent members of the National Security Council, of the UN Security Council, have a vested interest in maintaining the status quo. But in fact, the ideas about changing the UN Security Council have been around literally for a couple of decades. Maybe there will be reform in the future, but when is very hard to predict.
Okay, Mr. Ambassador, it's really helpful, as always, to have you with us. That's John Herbst. He's former U.S. Ambassador to Ukraine. Coming up, we're going to be talking with Senator Bob Menendez of New Jersey about the congressional banking hearings today and tomorrow. This is Balance of Power on Bloomberg Television and on radio.
Work to do.
75 basis points seems to be baked in.
How quickly do they get to the terminal rate?
How long do they hold them there?
Chairman Powell's going to have to read the same speech twice.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Is the consumer buoyant?
The dollar is a great place to hide.
The U.S. are going to overdo it.
Investors just have to hold on to their hats.
With special commentary from former Fed Vice Chair Richard Clarida. Bloomberg Surveillance. The Fed decides. Today on Bloomberg, your global business authority.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. It is Fed Day, and usually markets go up, equity markets on Fed Day. We're going to check in now with Kriti Gupta to find out if that's true today.
It is true today to some extent, with a little bit of a caveat here. I mean, as you pointed out, we tend to see a little bit of a sell-off before Fed days, especially after options expiry days that we saw last week. So this is pretty normal when we look at the historical trend. On Fed days, we have actually seen rallies of almost 2% every single Fed day. And what happens is this idea of sell the rumor, buy the news. And it's basically being done because the markets are pricing in exactly what the Federal Reserve kind of wants it to. So, for example, this time around, we're looking at 75 basis points, no changes when it comes to their current quantitative tightening plan. The real question is going to be their forecasts on unemployment, their forecasts on GDP, and of course, any indication of what's going to happen in November. Do we start to see a tapering off in those rate hikes, or do we actually see another 75 basis points?
Yeah, and you're not seeing 2% up on the equity market. You're seeing like a 0.5%
right.
roughly. But what about the bond market?
Right. So the bond market is interesting here. The 2-year yield finally crossing that 4% level. Matt Miller pointed this out to me. It got to 3.99 yesterday and then came right back. So you can see that 4% is a key technical level, but it's not going much further than that. So I'm curious to see in the actual Fed release if you do have this kind of sell the rumor, buy the news impact, and you see a much bigger rally than the 0.6% that you are currently seeing in the S&P 500. Does the front end of the curve actually follow? And I would say the back end as well. You're looking at 3.57 on the 10-year yield. And some people are saying this is perhaps the case for even a 5% Treasury yield by the end of the year. That's pretty ambitious, but it's out there.
Is geopolitics playing a role at all, or is it all about the Fed right now? I mean, we did have President Putin out with some somewhat alarming remarks overnight.
Well, it does and it doesn't. In terms, I think the Fed is driving the market action, but there is a geopolitical element to it, which coming into today, before President Putin's comments, there was an expectation that you would see a bigger rally in the stock market. Once again, sell the rumor, buy the news. But that has turned around a little bit. And that's why I would say sentiment is perhaps a little bit weaker. And you're seeing that in the oil market, because on the comments, Brent crude went up to $92 a barrel. We are now negative on Brent crude on the day, down by 1% with an 89 handle. What that tells you here is, on the one hand, you have that inflation trade that boosted the market in the first place, and then it reversed on the idea that growth is actually the bigger concern, which brings it right back to the Federal Reserve.
Fascinating. Thank you so much, Kriti, for doing that on Fed Day of all days. That's Kriti Gupta, and you can catch her again at 1 p.m. Eastern Time on Bloomberg Markets, where she will be anchoring. Coming up, we'll address the immigrant crisis in the United States with the president of the Lutheran Immigration and Refugee Service. We're going to go through exactly how big a problem we have, why we have it, and yes, what maybe we could do about it. That's coming up next on Balance of Power, and we are on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Shortly before we came to air, we got news from Letitia James. She's the Attorney General of the state of New York, that they are filing a civil suit against former President Donald Trump as well as his children to really address the issue of overstatement of the value of certain corporations and assets as they sought loans. We welcome now Bloomberg's legal reporter, Eric Larson, to take us through what we know. So it just came out a short time ago, but what do we know, Eric?
What we know is that this 3-year investigation has finally culminated in this civil lawsuit accusing Trump and 3 of his adult children, Don Jr., Eric Trump, and Ivanka Trump, and other individuals and the company of engaging in a long scheme to inflate the value of Mr. Trump's assets for various financial benefits like lower taxes, better bank loan terms, insurance coverage, things like that. That it covers a wide range of his properties, from things like his 40 Wall Street tower here in Manhattan to Mar-a-Lago in Florida, and that the scheme went from allegedly 2011 to 2021.
So we knew a fair amount about this. There'd been some reporting about some of the allegations, at least, about some of this overstating. What is the possible remedy? As you say, it's a civil suit. It's not a criminal suit.
That's right. It is a civil case, although the Attorney General in her press conference today did say that in order to prove her case at trial, she will show that Trump and his company allegedly did break some criminal laws as well. And she did refer the matter to the U.S. Attorney's Office in the Southern District of New York, as well as the Internal Revenue Service. So it's unclear where that might go, but it is a civil case. It's very early stages. Like you said, we've been hearing about this for a while now as James sought to enforce her subpoenas and get deposition testimony from Trump. But this is really just the beginning. It could be a fairly long process.
Well, as you say, it's just the beginning. We don't know who will win or lose the case. At the same time, if in fact the Attorney General were to prevail, do we have a sense of what this would mean for Donald Trump himself, his children, as well as his organization?
It's pretty significant. There's a long list of potential penalties that she's seeking, including barring all of the defendants from being directors of any company for 5 years, barring the company from doing any commercial real estate transactions in New York for 5 years, and even potentially putting their ability to do business in the state at all at risk. On top of that, she's also seeking about $250 million in disgorgement, what she describes as all the profits that Mr. Trump and his kids and his company ever got from this alleged scheme over the years.
Okay, thank you so much, Eric. Really appreciate this. Eric Larson, he reports on legal issues for Bloomberg. We're going to go from one end of the socioeconomic spectrum to the other now, from the Trump Organization to some of the immigrants seeking asylum status in the United States and what's being done with them. And for that, we turn to an expert in the area. She's Krish Omara Vignaraja. She's president and CEO of the Lutheran Immigration and Refugee Service, and she was formerly policy director for First Lady Michelle Obama. So thanks so much for being with us, Krish. First of all, give us a sense, because we hear a lot of anecdotal reporting, some reports about a few here, a few there. How big a problem is this?
It's a massive problem that continues to grow. So today we are talking about 660,000 asylum cases. If you want to compare that to a little over a decade ago, in 2010, we had about 100,000 asylum cases. And if you combine those asylum cases with all the different cases that would be in the immigration courts, including deportation orders, for example, we're talking about immigration courts facing upwards of 1.8 million cases, which is why asylum seekers, so many migrants, are waiting years in order to hear their cases heard.
So, Krish, my understanding is before all this happened, we didn't have enough people to hear all those cases, the pending cases. And now they seem to be ramping up substantially. I've seen numbers that back in 2019, the last time under President Trump, before we had the pandemic, it was something like 900,000 incidents across the border. It was now 2 million last year, and we're, I think, at 1.6 million so far this year. How can we ever process that many claims for asylum?
Yeah, I think it's important to put the 2 million in context because President Trump introduced a rule, Title 42, which was a purported public health rule, but really it was an immigration enforcement rule that was used that used public health rationale in order to apply it. So essentially, what it does is it allows for a migrant who crosses the border to be summarily expelled. There's no process. Customs and Border Patrol agents are actually against this rule because it means that people can try over and over again. So that is why that 2 million number is actually a little bit inflated. But I also think it reflects why we shouldn't have Title 42 in place. We should allow those who have legal claims to come to the southern border and make the case.
At the same time, there are those, you've heard from them, I'm sure, that say that, in fact, part of the problem we have right now is because President Biden very explicitly said he was going to change the rules so you didn't have to stay in Mexico as you made your case, and that was actually a form of moral hazard. It was encouraging people, maybe cruelly in some cases, to come across the border. What do you say to them?
Yeah, I mean, I think it's important to understand that we are not going to detain, deport, or deter our way out of what is a humanitarian crisis. What we need to do is recognize that last year we had the fewest number of immigrants coming into the US since 2010. And what that meant is that even Ukrainian refugees didn't have a real pathway until the Uniting for Ukraine program. So we had over 20,000 Ukrainian refugees come through the southern border. Because there is dysfunction across the immigration system, what ultimately happens is the southern border seems to be the only way to get into the country. And that reflects not just the administration's need to step up and create a coherent system, but it also reflects Congress's need to implement reform. We haven't had that for over 3 decades.
Well, that certainly sounds right to me. But these poor people, and let's be frank, I think probably every single person involved is not having an easy time of it in life. That's why they're in this situation. Have become sort of political footballs between Republicans and Democrats, the right and the left. People are running for midterm elections on it. And I don't hear either side particularly coming up with a solution. You're an expert. If you had your druthers, if you could do what you want to do, what would a reformed system look like?
Yeah, I think it would require us to understand what are the principal reasons for why people come into the country. Humanitarian reasons are obviously a key one. That requires us to have a robust refugee resettlement system, but also to allow those who do seek asylum at our southern border to have their day in court. Right now, we are at some of the lowest numbers of refugees coming into the country across both Republican and Democratic administrations. We used to have 95,000 as the target of refugees coming into the country. This year, we'll probably hit less than 20,000. And that's been consistent for the last several years. For economic visas, we're talking about H-1Bs, H-1As, H-2Bs. Those visas are significantly below what our market requires. So when we have 11.2 million jobs going unfilled, this is where immigration has to be a solution because we have the lowest birth rate since the census has been tracking this issue. And the truth is, we see these jobs, they go unfilled for years. And then the final piece is recognizing that family reunification is something that I think America is committed to in terms of reuniting families, but that is a decades-long process. By some accounts, it's taking 2 decades for family members to sponsor family to come here.
Well, Chris, as you know, Bloomberg really deals with business and the economy. We have any number of economists and business people come here who say a version of what you just said is we need more immigration of some sort. Let's put aside exactly what sort. We need more people coming to the country to fill all those jobs. At the same time, I think most people agree that part of the definition of a country is being able to control its borders. Do we have control of our border, our southern border right now? I saw that Vice President Kamala Harris was asked that question. I'm not sure she had an answer.
Yeah. And I think what you're saying is exactly right. The vast majority of Americans do not believe in either extreme of a completely open border or a completely closed border. Of course, there are still irregular border crossings, which are problematic. And frankly, we shouldn't be looking at more antiquated solutions like a border wall where we've seen the workarounds. We should be using smart technology. Senator Coons, a friend of mine, has sponsored such legislation that has gone nowhere. So I think recognizing that we're operating in 2022 and we should be using the technology of this decade, I think is one critical part. But then I think it's important to understand because we keep hearing this label of illegal immigrants. When we talk about the people who have been, sent to Martha's Vineyard, for example, these are people who undertook months-long journeys. They sought out border officials. They were processed, they were documented, they were given their legal papers in order to pursue their legal cases. That's a legal right recognized by U.S. law, by international law. Now, of course, if economic migrants are coming across the border, there's got to be a better way. They should not be coming that route. But I think it's important to understand that for some of those who are seeking protection, they are legal, documented migrants, and they should be allowed to exercise their right in this country.
So we all hope that we sort this thing out, but as we're trying to get it sorted out, in the meantime, who is feeding these people? Who is giving them shelter? Who is bearing the burden of this? Because obviously a lot of communities, a lot of cities are really feeling a lot of pressure from it.
Yeah. So it's groups like mine, Lutheran Immigration and Refugee Service. We have services for asylum seekers in Texas, Arizona, New Mexico, Florida. And I think it's important to understand our facilities, they're not being overrun by asylum seekers. When we hear these words from, the Texas and Florida governor, just want to be clear that those states don't have robust services. The reason why these migrants come to those states is not because there is some massive social safety net and people feel like they're able to be, quote unquote, leeches on taxpayer dollars. That's not the case. It's actually congregations, community-based groups, private fundraising that allow for us to serve these individuals, to provide them a meal overnight, to provide shelter. Oftentimes we work with churches so that we can help these people. And many of them are ultimately going somewhere else in the country. And so I think that's where it's important to understand, even for those coming to DC, for example, 90% of them have a destination somewhere across the country. The vast majority of those coming across the southern border have a family member, have some U.S. tie, and that's in part why they're coming here, because they know, though they're fleeing the most dire of circumstances, they might be able to get some support while they're waiting here. Vast majority of asylum seekers, it takes them many months in order to get work authorization.
Chris, this has been really, truly helpful. Really appreciate your time today. That's Chris Omara Vignaraja. She's president and CEO of the Lutheran Immigration and Refugee Organization. Coming up, we're going to go back to those hearings down in Washington involving the CEOs of the banks and go over exactly what we have learned so far. That's coming up next on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We've been having a first day of 2 days of hearings, actually, down on Capitol Hill with some CEOs, 7 CEOs of major banks. Today was the House Financial Services Committee. And to bring us up to speed on exactly where we are, we welcome now Sally Bakewell, who covers this for Bloomberg. So, Sally, thank you so much for jumping in here. Give us a sense. I mean, what I saw of it, there was a lot about inflation. There was a lot about what you're going to do to help that. There was some about regulation. Jamie Dimon doesn't like regulation very much. What else are we learning?
Yeah, you caught that too from Jamie Dimon not really liking regulation. That was actually quite significant today. Jamie Dimon, the CEO of JP Morgan, he's long lambasted these regulatory capital requirements that mean they have to sort of shore up high quality capital to protect against losses when there's a sort of doomsday scenario. Now, he said today that this kind of means that they end up lending less to the economy, which can be bad for America because he said they're potentially sitting on, $1 trillion, which they can't use when they need to. Now, this was sort of echoed by other CEOs. Brian Moynihan, the chief executive officer of Bank of America, said that, if they have to increase the capital they have to hold by 1%, that's $160 billion that they can't lend to the economy.
So inflation, obviously, a very big topic. I think every single person got asked about inflation more than one time. What can these banks do about inflation?
Well, they really fall over themselves to emphasize how much they're trying to help the consumer at the moment. They're helping with mortgages, they're helping to limit overdraft fees, and they acknowledge that they are kind of they're having a crushing impact on the consumer, and that this could also contribute to a slowing in the American economy. But they're very, very, they really make an sort of effort to emphasize how much that they are trying to do to enable the consumer to be able to make their mortgage payments, to make their rent payments. And they also say that they're still, Jamie Dimon said today that the consumer is still in relatively good shape, but he acknowledges that there are forces on the horizon that could make things difficult down the road.
Sally, let me ask you the unfair question. What is the purpose of these hearings? I mean, I'm not aware of any pending legislation they're taking a look at. I'm not sure this is oversight. What are they accomplishing?
Well, the hearings themselves took a bit of a beating from one of the lawmakers who was asking questions today. They say that they're kind of like a show trial, really. It gives the banks a chance to almost press release some of their activities, and it gives lawmakers a chance to sort of boost themselves ahead of elections. But ultimately, it is important, I guess, for banks to be held accountable. Other topics that came up today were diversity, racial equity, their energy lending, their fossil fuel lending, their ESG efforts. So, acknowledging that these hearings often don't result in action. That was one of the things that was said by some of the lawmakers. But banks, they get this chance to be held accountable.
I also noted that one of the subjects that came up was who was not there, which is Gary Gensler from the SEC. We had more than one Republican saying, you know what, we've seen a lot more of you CEOs of banks than we have of Gary Gensler.
That's true, but who also wasn't there? The Goldman Sachs CEO and the Morgan Stanley CEO, because these hearings, they're very much more consumer-focused this time, and they also go on tomorrow, and those banks don't have such big consumer-focused operations. Now,
it strikes me we've got midterm elections, in this country coming up, and that committee might look very different if, in fact, Republicans take back over. For example, you'd have Mr. McHenry as being the new chair. What do we expect different in the Senate hearings tomorrow, or do we expect anything different in the Senate hearings tomorrow?
We could see a few more fireworks tomorrow. And in fact, it was McHenry who was the one who was sort of blasting these committee hearings for not really achieving anything. And of course, the Republicans, they tend to sort of more congratulate the banks, and they're less pro-regulation that the banks also have taken issue with this time round. I think tomorrow could be a little more tense. We might see a few fireworks, but we have had some tense exchanges today. They were jousting over China and whether banks would reduce their presence in China should it invade Taiwan. And, we had the Citi CEO, Jane Fraser, say that under the hypothetical scenario where they didn't take US government guidance, it's something they might do, which is actually quite an interesting acknowledgement. And there were some tense exchanges over Russia too, because of course things have escalated there with this potential looming nuclear threat. And the CEOs were asked, if they have very directly, if they have wound down or if they're materially cutting back on ties with companies like Gazprom, and they, these were sort of questions that they found difficult to answer.
Fair enough. At the same time, I have to note this is actually the Financial Services Committee, not the Foreign Affairs Committee, as we talk about Taiwan and Russia. And by the way, we also had a little peroration from Jamie Dimon, the CEO of JP Morgan, on energy policy. His opinion on what we should do with the U.S. energy policy. I mean, they get pretty far afield.
I mean, that's right. But Wall Street banks, essentially, they're a lens to all of these topics. And we've seen this year that they have a huge role to play in crises like Ukraine and Russia. Their activities in both of those countries fall into the spotlight. And yes, Jamie Dimon, he took the moment to say that fossil fuel lending is actually needed in order to reach carbon dioxide reductions in the long term. And he sort of almost defended fossil fuel investment policy in a way, which, you know, is another very contentious issue for banks because they are under, they have obligations to meet clean energy targets, but they also have to finance, they have relationships with coal or gas companies that they want to finance. And Jamie Dimon indeed said they're committed to financing responsible coal.
Which have become controversial in some places, actually, those lending practices. Sally, thank you so much. It's really good of you to be here for that summary of these hearings so far. That's Sally Bakewell, who covers banks, supervises actually our coverage of banks here at Bloomberg. And now it's time to keep you up to date from news from all around the world, not just on Capitol Hill. And here with the first word is Lisa Mateo.
Thank you, David. Donald Trump is being sued by the state of New York for allegedly using fraudulent asset valuations at his real estate company. Attorney General Letitia James filed the suit today, the culmination of a years-long probe into dealings by the former president and his family. 3 of his adult children are also named in the suit. Trump has been under intense scrutiny ever since his Florida home was searched last month by FBI agents who unearthed highly classified documents taken from the White House. Retail gasoline prices in the U.S. have posted their first increase in 98 days. Now that suggests consumers won't get much more relief at the pump. According to Auto Club AAA, the national average increased less than 1 cent overnight to $3.68 a gallon. Gas hit a peak of $5.01 in mid-June. And in the UK, the government has unveiled a $45 billion bailout to help companies with their energy bills this winter. For 6 months, there will be a cap on wholesale energy prices that feed into gas and power contracts for businesses. Afterwards, there will be a review to determine whether support is still needed for certain sectors. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
This is Balance of Power on Bloomberg Television and Radio. I'm David West. We want to turn now to a Bloomberg Big Take out today. And Amanda Gordon of the Wealth Team is here at Bloomberg to take us through it. And this is Ken Griffin redoing all of Southern Florida. He's not just moving.
This is a billionaire. He's actually worth $30 billion. And he's become Florida's richest person with this move. He brings his financial empire with him, Citadel, and a hedge fund, and the market maker, Citadel Securities. And he'll be bringing a workforce with him of highly paid workers. So we have a business change in Miami. He's building an office tower on his own. He recruited a Chicago developer from the town he moved from to work on this. It's a waterfront tower. I had a chance to look at it when I sat down with Ken in Miami. In an office with amazing, Biscayne Bay views, and he's transforming the skyline, the culture. So Miami, we think of suntans, nightclubs, the crypto diehards, and Ken is bringing his very driven, very competitive workforce.
And he's going to affect philanthropy. He cares about education, things like that, but also politics. He's a best friend, it appears, of Ron DeSantis, who might be running for president.
Well, when we met, Ken Griffin talked about meeting DeSantis when he was first running for governor and immediately being drawn to the fact that he cared about education and the environment. And Ken, having been born in Florida and attended middle school and high school there in Boca Raton, he connected with these issues because the water supply there is a serious matter.
And there may be a position for him in the DeSantis cabinet if we ever get to that point, right? Thank you so much to Amanda Gordon from Bloomberg. It's a terrific big take you want to read on the Bloomberg. Coming up, we're going to have full coverage of the FOMC rate decision here on Bloomberg.